And I just want to thank the many UEC shareholders that I see in the room. Continued support from all of you. We greatly appreciate that, myself, management, and the board. And we're going to spend about a few slides on the macro. We always need to with uranium. I would really kind of draw your attention to maybe key numbers. For example, really the production and the demand-related rebalancing that we're seeing in the market. The theme in the uranium sector over the last few years has been supply cuts, production cuts in response to the very stubbornly low uranium prices that we've seen. 2016 production peaked at 162 million pounds. In 2017, it fell to 154 million pounds. And in 2018 and 2019, we're projecting to see 135 million pounds of production. That's production from mining activity. And demand projected to be about 194 million pounds. Even with secondary supplies accounted for, this year we expect to see a deficit on the physical side as we did last year. And this is definitely supporting an improved uranium price. Last year we saw a 35% increase in the spot uranium price, rising from $21 per pound to roughly $28.50 a pound, which is exactly kind of where we are right now. The other important point that I want to touch on is really this changing narrative around nuclear power that we're witnessing. And it's really to do and driven by the fact that many of the key opponents of nuclear power are now becoming supporters of nuclear power. And this is definitely helping drive a shift in the legislature and things that are being developed on Capitol Hill. Just earlier this year, President Trump signed a new bill, which is basically called the Nuclear Energy Innovation and Modernization Act, into law. This is a bipartisan bill in support of streamlining developments around nuclear power and uranium mining. In the US, the Department of Commerce has launched a probe into the national security matters of uranium. Uranium requirements in the US are for power generation and also for the Department of Defense. Power generation needs almost 98% of that is being imported right now. And that's something that the US Commerce will come out in April, and the final decision is by the president in July. 40% of supplies are coming from Russia and Kazakhstan, and the US is looking at this very strategically for energy security and national security matters. I want you to watch this next video by Rick Perry, Energy Secretary. It really speaks to where the mindset is for the current administration towards nuclear power.
It's about America maintaining or regaining, maybe a better word, our leadership role in nuclear energy, because the Russians and the Chinese are very actively engaged in across the board globally to go put their technology to gain and leverage their political place, if you will, using nuclear energy as one of the levers. This is a massively important issue for the security of America and the security for America's allies.
So in that context, we have arguably one of the most profound catalysts in the uranium sector, especially for the US uranium industry this year and the coming months. In my 14 years that we've been building Uranium Energy as a US company, I don't think we've ever seen a turn of events like this, nor have we ever seen such overdependence on foreign imports of uranium. Again, 98% of uranium requirements in the US being imported right now. So in that context, switching over to UEC, and for our company, our three-pronged strategy has continued to be focused around being 100% unhedged, making sure that we have full exposure to a meaningful recovery in the uranium price, putting our focus on development on in-situ recovery projects that are lower cost and environmentally friendly, and lastly, taking advantage of this very long downturn in the uranium sector to make acquisitions, believing that an acquisition-driven strategy created longer-term value for our shareholders than only drilling and developing assets. So we've really done both. And so our portfolio today is quite extensive and it's quite diverse. Initially, what I'm highlighting here would be basically our in-situ recovery assets, projects that are in Texas and Wyoming, and make up what we like to see as our path to production and back into production. Then again, during this downturn, we've made acquisition of hard rock projects in the US with resources in the ground, gives us great leverage, again, to the uranium price. We've acquired projects in Canada in the Athabasca Basin for some exploration exposure. In Paraguay, we've acquired projects that were previously drilled by the likes of Cameco and Anschutz. We happen to be quite active in Paraguay, and in the last couple of years had an opportunity very inexpensively to also pick up the world's largest high-grade titanium project. It's a resource stage project that David Lowell was developing, and again has incredible pedigree, and it's something that we plan to divest and monetize in the coming years. And finally, this past year, we've been very focused as the seed and initial investor, and to this day, the largest shareholder of a privately held company called Uranium Royalty Corp. This continues to give our investors exposure to uranium in more than one way. Uranium Royalty Corp will look to do an IPO most likely this year, and as it does, it will continue to be exposure for our company to a very exciting business and a novel concept in the uranium sector, but a proven model. In the US, the name of the game is infrastructure. There are lots of pounds in the ground, but what the US has shortage of is infrastructure and fully permitted infrastructure. What we have plenty of are basically the facts that we have fully permitted projects in Texas and Wyoming, we have infrastructure, and we have resources in the ground. I want to draw your attention to this.
I'm Greg Kroll, superintendent at UEC's Hobson facility. I've been in the uranium industry for over 35 years. The shortage of uranium mining infrastructure in America has me excited and proud of our fully permitted facility where we have a state-of-the-art lab, automated plant, and highly qualified engineering department, which enables us to be the hub for all of our ISR projects in South Texas.
This has really been the driver for us owning the Hobson facility, having the people on hand that can truly take projects from development to construction to operations. The picture you see here is of our Palangana mine. I think what's unique about UEC is the fact that we have the proof of concept. We did build and operate the Palangana mine in 2010. For about 3.5 to 4 years, we demonstrated low capex and very low operating costs. Our all-in costs to produce uranium, our cash cost that was reported based on results over 3 years was about $21.77 per pound. That's a very competitive profile for a project anywhere in the world, and does position us well on the low end of the cost curve, globally speaking. And that's what's been driving our efforts into additional ISR projects. In South Texas, we've been focused on the developments at our Burke Hollow project. This would be our second project to be developed after Palangana. And the uranium that we mine here using ISR method would be processed at our Hobson plant. This project started with a grassroots discovery in 2012. Over 700 holes later, we started permitting. We have a 43-101 resource. We've only explored 50% of the property. Later this year, we expect to have all of our production permits in hand. And this year, we're committing the capital to do the initial drilling to define our initial production area at this project. So here again, you have a great case study where our company and our people were able to take a project from grassroots to development, and again, with the right uranium price. And we're looking for a price over $45 per pound to get back into production and take advantage of this infrastructure and permit and resource advantage that we have. In Wyoming, through acquisitions over the last 2 years, we've now consolidated and acquired the Reno Creek project. This is the first time since 1980s that this project is now under the ownership of one company. Up until now, it's been fragmented ownership. It ranks as the largest permitted pre-construction ISR uranium project in the US. In-situ recovery in the Powder River Basin of Wyoming, near infrastructure and other uranium mines and processing plants that are there and available. This project now will be advanced, and currently we have a pre-feasibility study underway on this project. A new and consolidated 43-101 resource just came out recently, 26 million pounds of M&I resources. And again, the key being that this is a permitted project in an area where there's a history of ISR uranium mining in the Powder River Basin of Wyoming. We have about 177 million shares outstanding. As of our latest quarterly filing, we have $24.5 million on hand. We have a $20 million credit facility where the principal is due in January of 2022. So the current cash on hand gives us a great amount of working capital to work through this exciting period in 2019, and especially with the catalysts that we have coming up with the Department of Commerce and Section 232. Market cap is about $227 million. Our pre-Fukushima market cap was close to about $800 million. And back then, we had about a third of the resources that we have today, and only one project for 1 million pounds fully permitted. We're covered by 5 analysts, including Jay Taylor, who's been covering our company actually since IPO, I believe, so it's been a long time. So in summary, quickly on the macro, the key points I think you need to be paying attention to is that the production cuts in the uranium sector have been real, and they are driving a higher uranium price. Second, global nuclear energy output last year finally surpassed its pre-Fukushima levels. Fukushima was a painful experience. It's taken a long time for this industry to recover, but every sign indicates that we are in full recovery mode now. US production is at its lowest point since 1940s, and this is not a sustainable picture. And the Department of Commerce 232 investigation is only months away. The outcome of that are months away, and really creates an exciting catalyst for companies in the US with the ability to quickly ramp up US production. So for us, it couldn't get better. But having said that, we've been doing this for 14 years. For 14 years, we've believed in the opportunity to be an unhedged US uranium company. And so for 14 years, we've put the foundation in place. And the foundation is our ability and our goal as a company to become the top low-cost US uranium company. We have projects for permitted capacity that gives us a profile and potential for 4 million pounds per year. That's using in-situ recovery and other assets that could be developed with greater output beyond that. In 2019, we'll continue advancing our production readiness at Burke Hollow and Reno Creek with the PFS and pre-feasibility study that we'll look to complete there, and really look forward to an exciting year for all of us and for those that are in the company and following our sector. Thank you very much.